Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Thank you for inviting me on, Jim. Always a pleasure.
Rick, President Trump says the U.S.-China trade deal now may not be done until after the election. Didn't last week they say they were very close to signing phase one of the trade deal?
Yeah, but you have to recall what I said last week, and which I think everybody must realize by now, everybody but Trump, and that is that the whole purpose of these trade talks is not to come up with some sort of deal, it's just to keep talking. And, Trump would like to keep talking until the election, and that's all it is. We're getting the process of getting phase one done, and phase one, by the way, is nothing. It's basically a trade of you buy hogs and soybeans for us, and we won't go so hard on your high tech companies. So there's nothing of substance that will be there in that phase one agreement if it ever comes. And you can imagine how little is coming and how little a chance we have of seeing the completion of a phase two. So really the talks and all talks about the talks are just being talked about to keep the talks talking. There's nothing there really.
So with that kind of news, is this what's brought the markets down?
Well, the market goes up and down for those mysterious reasons that we'll never quite understand, that I think technical analysis does a pretty good job predicting. But so when the market's going up, we all kind of look up, so to speak, at the news. Everything that was bothering us on some day when the stocks were going down is now is now a positive. So with the market down today, the idiots who write the news are saying, well, there's been the talks have soured between China and the U.S. And we know that whatever tweet or exchange between negotiators has come to light that is being cited as a negative today, that if the market were moving up, we would look at that same tweet or whatever, and the ignorant scribes would say, well, this looks good because the negotiators seem to have shaken off just a little bit of difficulty here in the talks.
So, are the markets down then just because of momentum? You can only go so high and you need to catch your breath?
Well, the markets are down for one reason, and I can speak personally to the truth of this because I was fooled as well. They had been so strong in November, and in my case, all of the broad averages had slightly or somewhat exceeded trend lines and important targets. So I was, as a perma bear, I was ready to throw in the towel when we came into December, and particularly because December seasonally is a pretty good month. Generally, the market's going to at least hold its own. Sometimes we have big rallies. Occasionally, we've got a difficult December where the market actually declines. But it all has to do really with the expectations going into December. So I expect that the bulls were very bullish going into December, and we bears were at the point of throwing in the towel, and that's why stocks are down so hard today. I had my commentary out this morning was under the headline, Santa comes diving into December. And it's, I guess, atypical, but it really is just, it's always going against what the the popular will wants and believes and expresses.
We'll have more with Rick Ackerman right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Ackerman, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Rick Ackerman. Rick, is a case being made for deflation?
Well, I always make it. And whenever I see yo-yos out there talking about, like it's Zero Hedge, about, oh, those inflation idiots, and they talk about how the price of lettuce or college tuition or whatever is going up, and, you know, where's the deflation? Well, the deflation is really, it's accumulating. It's a juggernaut of debt. And to the extent that prices are being pushed up essentially because of free borrowing. You know, we have inflation because people are borrowing to buy things, houses, groceries, medical care, college tuition, whatever. So all of that inflation, I guess you could call it consumer inflation, is being supported by borrowing. But of course, the offset to borrowing is debt. So the more we borrow to prop up the economy, to keep this illusion of prosperity going in the real estate market and in the stock market, the more that debt that eventually will implode continues to grow. So, and you can see the handwriting on the wall in the biggest piece of it, the housing market, because well, you know, there's no way that the millennials are going to be able to buy the baby boomers' homes, which are already too large for the baby boomers. They want to retire into something smaller. And the question is, who are they going to sell their $400,000, $600,000, $800,000, $1 million homes to? So we've got the seeds of a collapse in housing right there. But in the meantime, you know, the housing market has experienced a resurgence that has allowed the same marginally qualified buyers who were there in 2005, 6, and 7 to come back into the market. And yes, it's harder to qualify, and that has, in theory, that would impact the housing market negatively. But true to its nature, our always leveraging inflating system has found a way to keep housing going, and it's come in the really dangerous and pernicious way of all these private equity companies coming in, buying. Initially it was blocks of existing homes, and I had a friend who was working for one of these private capital firms. His instructions were to go into Denver and just buy everything, and you can see the result. You know, Denver is so inflated. The housing market is ripe for a collapse if there's a downturn in the tech sector, which supports a lot of the rentals in Denver. So, but private equity in the housing market has moved on to a new, I guess it's radically new, and that is the idea that they're building homes to rent them. So we've got a huge infusion of capital that's building new homes, not to sell, but to rent. And you can see where that's all going, that rents will eventually adjust downward, or we'll have an equilibrium between the cost of owning a house and the cost of renting one. But the rental market, to a big extent, is supported by the same factors that have just destroyed WeWork. You know, WeWork is all about these millennials who are in high-tech companies or tech companies, and you know, the job situation looks good. They're still probably spending way more of their take-home pay than they should for housing. So we've got here the seeds of a collapse in the home markets that's really going to hit from several directions at the same time.
We'll have more with Rick Ackerman right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what's happening in the bond market?
Well, I've loved bonds for a long time, and we've had a rough few months in the bond markets. Treasury 30-year has come down from late August around 166, 167, down to a recent low of close to 156. So, but when you look at the bigger picture, this big move we had in bonds, which corresponds to a spike in interest rates, is really just corrective. The bigger trend in bonds is toward higher bond prices and correspondingly lower yields. So the bond market has kind of moved with the perception that we were initially with the big rally from October of last year into September of this year. The driving story was that we were skirting recession. But, of course, the last few months with all the exuberance about the U.S. economy and the Fed saying no more loosening. I don't even know what they're saying now. They're saying no more tightening, I guess. But the story is that the U.S. economy is recovering strongly. There was always going to be some doubt there because Europe and China are in Europe in particular in difficult straits. China's a tough call. It's the growth has slowed down there, but they do some very amazing things. Huawei, which was on a ban, the U.S. companies couldn't export some of the hardware innards of their phones, but they managed to line up Asian suppliers, primarily from Japan. So now Huawei is going great guns again without U.S. parts. So, but Europe's never going to get out of the trap. And in any case, you've got this record highs in U.S. stocks going up against a backdrop that this is a news story everybody agrees on, that capital investment has really taken a big hit, that a lot of firms have pulled back, and we're starting to see it in the corresponding the links in the chain in the transport sector. And so we wind up focusing really on the Christmas shopping season. And every year, it's like gag me with a spoon. We're reading about the Santa rally and how it's always struck me as kind of pathetic that the country is so fixated on Christmas sales figures. If a country really needs a lot of Christmas buying to make a material difference to its economy, then it's really not in such great shape. We would rather be reading about a resurgence in capital investment and research and development and stuff, and yet we are more focused on, so to speak, how many neckties get sold in December. Not that anybody's buying neckties anymore, but the nature of the junk has changed, but it's still a lot of junk, and we'll wind up in the end with fondue pots and toaster ovens and I guess the later iterations of those, the sous vide to prepare your meat before you grill it. So that's where we are.
How's gold dealing with this?
Well, gold's in a nice little rally today, and I've been just trying to temper the enthusiasm of my own subscribers for gold. Like bonds, gold, the big uptrend from last October is unmistakable, and the selling that we've seen in gold since it topped in early September really looks corrective. So I think gold's got another move up, but it certainly bamboozled me as far as where we should jump back in. I've got a couple subscribers more enthused about gold than I am, and they've read it a lot better than I. So they've been in the chat room, and they've taken a nice stake in GDX for one. That's a good proxy for the mining stocks. And I know that someone was in there. The GDX is currently trading 27.64, and we had a guy recommending the January 30 strike calls. That they've doubled since he recommended them. And of course, you always want to be in that position where you sell half at twice the price and you're left with the remainder at no cost at all. And they're not so far out of the money either. They're just $2.35. So at this point, I'm going to go with the bullish instincts of my own subscribers. And I would say that gold's next rally, this would be basis the February contract, could take us above 1,600. Currently at 1484.70, but just going with the flow. I have to say maybe gold is done tormenting bulls and is ready to finally do something here.
Are we going to see crude prices increase anytime soon?
Well, crude ain't gold. Crude is really a commodity that gets used, and of course it's going to get used less in a recession. Except for the huge, we had a spike into last October that took a barrel up to around $75 or so, and it came all the way down to 45, so that was some move. But if you sort of take that move out of the chart, gold has just sort of bounced around in the mid to upper 50s for a long time. But I don't think the world economy right now is in such a state that it's going to support substantially higher oil prices.
Mm-hmm. Going back to Europe, just a few days ago, Germany said, we're not in recession. Our GDP grew 0.1%.
Yeah, wish them good luck. I mean, remember also that Germany is the engine that's pulling all of Europe along too, or at least expected to. And the Germans are reluctant to pull out all the monetary stops, and you had the European Union leaning on Germany for fiscal stimulus. The idea that Germany, never mind, we can get enough monetary stimulus from the European Central Bank, but let's see the engine of Europe spend more money than it's taking in taxes. Well, that ain't happening. Germany loves to tax, and so they can only get out of recession, but so much. We can cheer 1 month's progress out of the hole, but I don't think they're out of trouble by any means.
Rick, how would you sum up the markets right now?
Really dangerous. I think that we can kind of discount the selling that took place yesterday and today as just a reflex reaction to everybody's being too bullish coming into one of seasonality's good months. But you don't know. I mean, looking at some of these trend lines I mentioned earlier and some of my own hidden pivot targets, there's that possibility that they've made a very important top. When I say that, I mean to imply that the bull market begun in 2009 is actually over. It would be a bit of a surprise for that to happen in December, but I'm at least alert to the possibility. My gut tells me, though, that we're going to come out of this selling and have a flat to somewhat up December.
Rick, thank you so much for chatting with us.
Well, thanks for inviting me, Jim. I really enjoyed our conversation.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. You can also find us on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.